Hey everyone, and welcome to your daily update for SOL and BTC. It is New York close, so the algos and little bots are going crazy, shutting off positions and doing various things right now. So you sort of see that little bit of volatility that usually comes in around the 8 p.m. UTC. So as far as direction goes, this is one of those times of the day where you don't make any decisions because you might think, oh look, it's going down, but that's just because you've got a whole bunch of bots and algos closing longs or and selling positions, or you might think, oh, it's going up, but it's just a whole bunch closing out shorts. So you're better off just to wait, see what happens. As far as liquidity, etc. goes, the chop that we've been going through in the last 24 hours has definitely created a pretty even playing field on SOL and BTC for the 1 day. So getting all these alerts going off. So it doesn't really tell us anything other than they've got an open book to either go up or go down. So and someone in the Discord just says we got our tweet. What's this? I believe that China purposely not buying our soybeans and causing difficulty for our soybean farmers is, oh my god, economically hostile act. 1 minute to market close. Gotta love it. Anyway, so yeah, it's not planned, is it? Let's see. Oh, maybe I should start this again. No, stuff it. There you go. That's life though, isn't it, as a trader? Waiting for a tweet about soybeans. Okay, so 1 day, pretty much telling us nothing. It's an open book to go up or down. I mean, whatever structural closes we get today will give us a bit of an indication about what it's going to do. But if you were just looking at a heat map, you'd be lost. Looking at that, you wouldn't know what to do. If we go to the 7 day, same thing pretty much on SOL, even playing field, up or down. BTC, a little bit more of a bias to take shorts, but the thing is, they're better off taking longs anyway, and letting shorts build confidence. And then typically the way you see a short squeeze is it happens very quickly. They move up into the shorts, they get them trapped, they give them confluence to add to the shorts or try to do some covering, makes the positions bigger, and then they go up again. So often people comment like, why aren't they taking the shorts? Why aren't they taking the shorts? But the thing is, like, short covering is infinite. There's a guy Blue in the Discord who he said this many times. All these shorts, they can just keep going up and up and up and up and up until basically the businesses are bankrupt. Longs, they can only go to zero, right? So and probably won't, on something like Bitcoin. So when it comes to which direction you want to give confidence to and then trap, you want to give confidence to shorts, and then you want to trap them, and then you want to give them a little bit more confidence, and then you want to trap them again. And basically that's how these things can be way more profitable to squeeze than what longs are. So even if you look at a heat map like this, or a liquidity map like this, there might be more to the upside, but they might just go and take these longs first, gives more confidence, builds even more to the upside, and then they'll go fast. So that's just purely trading on heat maps or liquidity charts doesn't always work. Okay, if we look at the 30-day, 30 days, a bit more bias to the upside in both cases. But if they were to do a swipe up, say SOL, you've got a pretty decent cluster there up to about that 216, 217 area, and there is some charts that are pointing at that at the moment on SOL. And if they were to take the downside, going back to the 180s on the 30-day there, they'd be taking quite a big chunk. If they went down to the 170s, it's almost getting to the point where there just isn't really much down there anymore on the 30-day. But and so if we talked about maybe a dip, if there was going to be, What do we've just had that soybean one, so what could be next? Bananas. Let's just say they say hostile China act not buying our bananas, and it decides to go for a dip. Yeah, it might come back down to that 107 area, maybe that 108 area, as a bit of a dip to take all that stuff to the bottom. And if suddenly China announces it's going to buy every single American banana and soybean, and the markets decide to spike, then it may go up to 119 or 120 or somewhere, yeah, to take all that upper liquidity, and then maybe have a little pullback to give some confidence to the shorts before the second push up. But we're really still waiting to see what happens when we hit that 124539 level. That's kind of the key thing, and we really want to be there this week. We do not want to not reaccumulate back to that level this week. Otherwise, the rejection off that level could potentially be a pretty nasty one, or the spike through it will become the blow off top in the end of the cycle, or one of those sort of scenarios. So there's a lot of real mixed TA on the charts where you can find a case for Bitcoin to go to 300k, and you can find a case for it to be heading back to 70. So it's just, yeah, it's just a little over the show, to be honest, at the moment. And the range, on SOL right now, I think the highest target we've got is about 286 based on just pure fib levels. But then the lowest target we've got is about 123 based on fib levels. So it's a big range. If you've got your liquidation points inside that range, and too many other people do too, then guess what? They'll move within the range. So just yeah, for me, what I'm doing basically at the moment is just taking higher leverage but smaller plays. So like let's just take the daily to the daily. Let's take the weekly to the weekly. First touch of trends, first touch of holds. That kind of thing. Yeah, I don't think it's really worth opening a really long-term big position, particularly on leverage right now. And it's if you've got them, and they're in profit, maybe just consider hedging them and getting the liquidations much lower and seeing how it goes. But we really need to see some decent structure and some consistency in the structure. Okay, so let's have a look at this from the other direction. So yeah, there's definitely a big chunk of cake to be eaten to the downside on SOL, and it's the higher time frame, as you can see, is to the upside, but so many people have chased this pump that there is all this lower time frame stuff, and for BTC to get back to that higher time frame liquidity, it's pretty much got to push up to 123 to be where any of the higher time frame stuff is. SOL would have to get up to about 213. I could definitely see SOL getting to 213 much easier at the moment than BTC pushing up to 123, because it's spending, like BTC is just spending too much time down here at the lows. And I guess the problem with this is that for BTC to actually get back up and take this liquidity at the top, it's, like I say, spending too much time at the lows, so it's building resistance above. And although SOL could go and grab all this, it's not really going to be able to do that all that easily if BTC actually doesn't move. So yeah, very, very funny, dynamic. Okay, let's have a look at these charts. Okay, so SOL BTC, there's not a lot of closes today. There's only really a 1 day, a 7 day, and a 41 day. So you could almost argue it's a wee bit of a prime day, just because there's not a lot of structural significance today. But as far as the actual levels that these are sitting at, there's a very old origin level from back here, and I actually think this, funnily enough, was some kind of Trump thing, where we had that dump and then they did that big shoot up pump. So that's created this level through here at 17933, and in the next 3 hours and 50 minutes, pretty much anything could happen, but closing over that level could allow it to then bounce off that level and then travel up to target the next one. So that's really what we're looking for. And of course, the most bearish thing that could happen to this is that the candle just keeps pulling down, closes back underneath the interior downtrend, and closes back underneath that 17933 level, and then you're just going to expect some more downside and another attack of the trends, basically. And that's about as far as we can see ahead for this. If it was to get down below the 17136, then that would be adding another layer of bearishness, because you'd be creating a hold level. But yeah, so all you really want to do is look to see where that candle closes. It's either got to be above 17933, or it's going to be somewhere down below here. The lower, the more bearish, is basically the answer there. And there are a couple of spots on here that are just very concerning sort of areas. This area down here, October the 21st, you've got a lot of stuff down here that has never been retested, and that's just the kind of thing. But markets are very efficient. There's probabilities around retests and that sort of stuff, and if you have an area where there's a whole bunch of things that all cross over on a certain day, then it can happen. So don't know if we're really out of the woods yet. Okay, let's have a look at just quickly how the weekly's playing out. Yeah, so the weekly went up, rejected off the backside of the trend. So pretty much it's just you've got trend fighting origin on the weekly, and we are now in the middle, 5 days to go. So all right, let's have a look at safety assets. Okay, so we don't like this. So we were going quite nicely here. So we had the big pump, and that was the huge alt dump. We've had the big rejection, and that was the recovery somewhat of alts. Then we started moving down. We liked that because that was giving them the ability to continue to recover. But unfortunately, it looks like it has found support on the retest of the range trend, and we did say that yesterday that is a possibility. It didn't go down and test any of the lower ones, so it's pretty bullish really for it to bounce there. Bullish meaning bearish for alts. And as it currently stands, it's sitting up above the range trend there at 66.03. It could create a hold level if it closes above 66.10, and it is hard closing. I think these levels down here were already hard closed, so it's not permanent. Like what it's doing is not permanent. It also looks like we've got 66.72 has worked through, gone down, closed under, failed to accumulate back to, and then technically that didn't touch it. 66.69. So you might get a hold level here at 66.1 maybe, That would be the most bearish outcome and for alts. And then you could bounce off that back up to that level, but that level actually could then have a first touch rejection and then send it back down to try and break these trends. So I don't know, that's the way this is setting up is you might get another dip across the riskier assets. And the other thing, of course, it could do, because there is plenty of time to go in the day, is it could just pull back down, below these levels, close under any of these range trends, and then reject off the backside of them. It could even close, under this 65.92 or this 65.94, any of those levels. If it closes under those, or this 65.68, then it could reject off the backside of all of this cluster of what would then be, resistance, and then continue to push down. So that's what you're looking for on there for the daily close. And as far as if you're looking for a level to enter, so let's just say it does close up on this and you get a bounce and alts take another dump. If you're looking for an area to enter, you'd look at, what happens when it actually comes back and hits the 66.72 area. That would be the whatever support level you'd find on the altcoins that corresponds with this hitting that would be generally an area that is going to hold or maintain a decent bounce, as this should be able to give a decent rejection. Okay, so just quickly check the weekly. Yeah, so the weekly's still below all the important stuff. So that's not too bad. Okay, so let's have a look at these totals. Now, someone posted a question on the YouTube comments yesterday about totals and charting totals, etc. So there's lots of different ways, to chart totals. You can chart just what they call total, which basically is everything. You've got total 2, you've got total 3. So total 2 excludes BTC, total 3 excludes ETH. Then you've got others. Others is basically all the poop coins. So that's what you see just over here on my list of things. As far as how you would chart these, and what I've found to be a little bit more successful is if you want to look at things like risk assets, you're better to actually take the totals and then take the main stables out of the chart, because stables coming in and out of crypto doesn't quite mean the same thing that it meant 4 years ago or older than that. In the past, the only reason really people put stables into crypto was then to actually buy a risk asset. So onboard stables, buy a risk asset, that sort of stuff. Nowadays, of course, people just put stables into crypto because they pay people with stables. So, so yeah, you can set up custom charts like this, where you basically have totals minus the stables, or you can just take them straight off the old market cap. Now, the reason why charting totals gives a bit of confluence to everything else is that if the total market cap is going to reject and go down, then you can pretty much expect that just about every asset will also have a very high chance of going down. So, and likewise, if you're looking for support areas, if you find a support area that exists on the total market cap, then chances are, if it's really hard to find where that support area might be on whatever you're looking at trading, well, chances are whatever you're looking at trading will find some kind of reversal wherever that total market cap finds its support. So, and so, looking at, say, the total market cap at the moment, we might end up creating this hold level here at 1.56. And so you might find that some tokens have got hold levels at that same area today, or a similar sort of confluence to this chart today. And you might find other tokens don't. They might just be yellow candle, yellow candle, yellow candle. But at some point, the yellow candles on that really bullish token is probably going to have a reversal and create the top of the range. And the best time for that to happen is going to be when the total market cap actually rejects. So, if you were looking at, say, something like Asta, which has been a very, very bullish token, you might find that the rejection on the total market cap creates the top of the range on Asta, even if Asta is just going up, 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 up. And things like Zcash, which were going absolutely mad for one point. Where would you consider taking a short on a token that's just parabolic and going up and up and up? Well, the main place you would consider taking a short on it would be, if there were a whole bunch of levels, it would be the level that actually kind of corresponds with the total market cap actually having some form of rejection. So yeah, that's kind of the overall reason why you would actually chart these things and keep an eye on these things. So yeah, as far as today goes, it pretty much looks like we might get a hold level. We will also, though, get a new interior trend. So the rejection of this hold level doesn't need to be a big rejection. It can just move, back to even 1.51 through to 1.56 could become the little wedge, the little flag, or whatever you want to call it. And then, over the next day or so, it's going to be a case of, does it close in a position where it can open on the wrong side of the trend and dump, or does it break the hold level and then continue up to test these upper levels up here? So that's pretty much what we get by looking at that. And this is just an example. If you had not looked at any other chart other than this chart, you would know that risk assets were going to go up a bit and then dump. And it's simply a fib level, a trend, and once we went above that level, there was going to be some kind of reversal. You could almost just find the weakest looking alt that exists, and you could just start layering into it as the total goes up into here, and then you would just TP as it hit the trend or hit that 1.49 area. And that's what we discussed yesterday, is that this could have this rejection from up in here and come back down to either the trend or to the fib level, and it's done. Now, neither side is breaking. So when it comes to the weekly, and there's still 5 days to go, so one of these two is going to break, and it's either going to be obviously the hold candle, in which case the entire market is going to explode, because that's pretty much the only thing to hold it. Well, there's trends and stuff, but as far as a structural hold, this is the candle that's stopping that from going higher. And the other thing that's going to happen is the end of the week is going to be in a position to break this trend, and by being on it or just next to it or slightly below it, and then boom, down it goes. So and if that happens, it doesn't necessarily mean that it's a bear market, because you've still got range trends, and the next candle maybe opens under the trend. It could come down, close with a wick, shift the support trend, bounce the support trend. The hold has already been tested. It can go to the break in an all-time high. So you can really only see one candle ahead, and the possibilities created by it. Okay, but there's our totals. As far as what's happening today, nothing on the weekly because it's not closing. Okay, let's look at it from a different perspective. So DXY balanced, and clearly it looks like there might be a hold level. We've already tested the hold level. We're still above the trend. It'll create a range trend, which will be there, and you'd have a perfect little spot for the price to bounce off. So it could go up into this hold first, which would mean a little push up into that 356 area, and then it could reject off the hold and come down to the trend down here. But if you look at that daily candle, if it moves between these 2 points, it's really no different than what we've just seen, in the last 24 hours. So it's just potentially indicating chop more than anything else. Okay, it's and exactly the same thing applies if we look at it from this direction. So we'll get a new range trend. That's bullish, and it may be attempting to keep the price inside that 3.59 origin. So that's a very key level on the daily total there. And as you can see, it's teasing with where it's going to close, but it's got a few hours to go. This is the kind of thing that could actually create a bounce back up through the trend and break the hold. So you might get a move just between there and there. We're back underneath that 3.59 range. If it closes under the 3.54, the rejection to the downside could be faster. But there's plenty of levels down here that are all, all of these levels have become high time frame support levels. So even if it bounces down into that, it's got support. So not really. Well, I think I'd say from that you might get another wick. Bit of a clearing of the deck from all the people that have chased the longs, maybe. At the end of the day, it's still under trend. And I think that's probably just the overarching thing about any chart. If the price is still under the downtrend and it's not in a position to open on the side of it that allows the candle to then actually break it, it can't break it. So, closing here, the next day cannot break that trend. It would have to be the day after that. The next day can position, it can go through the trend, it can open the next one, which then could break the trend. But, if it closes down here below that trend and doesn't pull back up to at least, where would that have to be? Probably about 3.59. If it doesn't pull back up to 3.59, it just can't break the trend. So it is what it is. And this is the kind of compression, so if people talk about Bollinger Bands and stuff like that, and they talk about how they squeeze and then you get a big breakout. Well, this is basically what you're seeing here from a TA perspective. You'll create a range trend. You got a hold level here. You got a hold level here. It's just going to squeeze until one side breaks. So, okay, let's look at BTC. So very much the same as the totals, but having just looked at the totals and now looking at BTC, you can see BTC is a little bit closer to the trend, and therefore it's in a better position. It's got a bit more strength to it. But that being said, if the total actually ends up rejecting off the trend, BTC will go down. So that is sort of how you can get confluence between, say, a 50-50 chance where maybe BTC opens on the trend. So you're sitting there going, oh, dang, we're on the trend. Are we going to go up or are we going to go down? But then you look at the totals, and if the totals is very much under the trend and then it touches the trend and starts rejecting, then that gives you your answer to your 50-50 outcome on BTC. So you can also sort of tell the relative strength difference by looking at this and going, well, BTC is the stronger part of the totals at the moment, and obviously altcoins are the weaker part, and that's easy enough to say. We all know that right now. So as far as the close, it looks like it'll create that hold level at 114, and what's that, 114.8? It's actually, there is a prior trend that was running through here, which it did get above yesterday, but it seems to have lost it and it's back below it. So, and potentially it's going to close underneath this, what's that, 113.309, which is a daily origin level from this range back here created here from August, and as you can see, it held the price down once it was hard closed on the 27th of August. It rejected and then rejected again, and then eventually it got back over it. But once it got hard closed underneath again, it rejected again. so it's a bit of a key level. In this case, it was hard closed here, but then it was hard closed on the top side there, and now we're down below it. If this is going to be one of those little, fake in between market, moves that maybe is what we're looking at right now on the screen, what they'll do is they'll pull the price back up on this by the end of the day, and they'll close just above that 113,309 level, which also would be in a good position to open on the top side of the trend. And the top side of the trend would then be able to bounce up to the hold level and try to basically break the hold level to continue up. So yeah, so if they do close that above there, then things like the hold level, the reverse trend here at 114.6, or even it starts to open the gateway to go back up there to that 116 level and make an attack at the other trend. So nice. Sorry, just got a Telegram scammer. Haven't had one of those in a while. Okay, so let's have a look at the 7 day. Yes, so 7 day could create a hold, so anywhere from 113,893. Really want to be closing back up over 113,995, that sort of area, to make sure we do not create that hold. Also, this could be under the 7 day downtrend again, so you might then get some kind of little rejection off the back of that trend or that hold, which could send you back down to 109, 108, or even 105, but hopefully you don't see 105. What you want is you want to stay above 105 for the next 7 days and convert 105 into a high time frame level. See, but yeah, but 109,302, 108,350 are already good support levels based on the 7 days. So yeah, it might come down to that, bounce back up from there. Yeah, that's definitely the first time frame right there that's actually showing that you might get a flush down to grab all of that liquidity at the 109, 108 area. But ideally, you just don't want it to touch 105 for now. Let's build some more support. Okay, so look at the 41 day. So the 41 day is basically under all the trends. So yeah, next candle could open and reject anywhere basically. So it could reject. So it's a big time frame. So what have you got? You got 114, 118.6, or up into the 120s, for that next candle. And then if it uses the support trend a second time and sort of it's dipped below it a wee bit there, but if it uses the support trend again, then that could be based on that little dip there, anything from the 107s to 109. So that's pretty confluent. Okay, so let's have we'll just have a quick look at some of the closes from yesterday as well, just so you can see, because we talk about these things and then I do wonder if people actually ever bother to execute them. So I'm just going to pause it a second and delete this scammer because they just don't stop. Right, so yep. this level right here, just as an example on the 2-day, which was your 109,919 level, and you had the trend that was running up through there. So after this actually closed back inside here, the touch of that trend and the fact that it couldn't get back over that trend meant that it was going to have to go down and try to find some kind of support level, which is this level right here. So this is pretty much where you can then just take a scalp on BTC, and you could have chosen to TP that based on some other time frame like the daily or whatever, but you know the support entry was just there, and if this candle had closed up above that trend we were talking yesterday, which was the other possibility, then you would have been able to take the trend up to this hold level at the higher price here. So this is kind of the point of waiting for it to close. Where is it sitting? Where is our resistance? Where is our support? And then yes, it could have taken 5 days or 10 days or whatever for it to actually come down and hit this line, but you know what the outcome's going to be when it does it. And furthermore, what this is looking like it wants to do, just say in another day, is it's way easier, like I mentioned yesterday, to relocate a trend to the bottom side and then bounce off it than it is to try and break it from the reverse. So it's better for this to have another day basically of chop like this, where the candle has a good sized wick on the bottom of it. It has a body like that, it stays blue, and then if it moves that trend to the bottom of there, it can bounce off that trend and then come up and target this 120 level. Right, so that's crystal ball gazing into the future about what they might be trying to do with this. But yeah, it gives you a bit of an idea about how you then choose to execute a trade. And as far as where do you put your stop loss? Well, because we spent this day up above these break levels that have all been hit, the next time we touch those break levels, we should get a pretty immediate bounce, just kind of like this little bounce that we got off this level. So you could choose to put your stop loss under any of these break levels. And what you could even do is if it touches those levels, you could add, so if you're up here and it touches these levels and you're actually at a, if you're being sensible and you're following the rules and you've got 1% per trade or whatever it is you trade with, not your whole bag, if it touches these levels, you could actually add to your position, increase your risk, yes, sure, but the chances that it just does a straight bounce off those levels and goes back up is very high. If it doesn't get back above the level above, well, then you just get out, and because you've averaged, you're actually not losing. So that's how you would trade something like what you see there. Okay, and so this close, the 11-day close, what happened? We created that hold level. What happened from there? We rejected the hold level, we targeted the trend. There's your trade. Okay. Could you have waited for that to target the trend and then take a long if say you're a spot buyer and you just were looking for a long entry and some kind of bounce? Yes, you could. You could have waited for that rejection. You don't have to short it, and well, you can't short it if you're in spot. And then, well, I suppose you could sell your spot. You could sell your spot to stables, and then you could wait, and then you could buy your spot back here again, and then you could let it go up and see how it plays out. But you'd be in profits in your spot now based on that position. What do we get here? We got this super indecisive close. Pretty hard to do much with that time frame. It was just what's it done? All it's really done is reinforced that 120.826 is going to be some kind of rejection level if we get there, but it's miles away. It never moved the trend. It never really did anything, but it did close above the trend. So I mean, you could have longed the trend, but that would have been much cleaner and more obvious as to what was happening based on the prior time frame. Okay. And that's a nothing. It's this candle could break. So it could break the trend and then dump. But all this really said is that we're going to get a long if we come down to 102 again. So this is a new range trend that's been formed in here. And if it approaches it with speed, tags it and bounces off it, it'll come straight back up through these support levels. And if it does it slowly and just festers down here, then the support levels will become resistance, and then it'll go back up. So if you long the trend and you're able to average in below anywhere from sort of here down to here, so there's more high time frame stuff now, building a position between 102 down to 93 at some point, if this does decide to go down there, will always give the option of basically getting out when it comes back up to try and retest the backside of one of these resistances. You just got to make sure that the actual position itself, you can get out at the backside of whatever it ends up just hovering under or festering under. Okay, all right, let's have a look at SOL. Okay, so SOL on the daily, it closed just up inside that level, bounced up and hit the top side resistance, like for like resistance, so that's just origin to origin. And then what happened the next close, unfortunately it closed down under it, so as you can see it's repeated. So it also did yesterday break that trend. So one of the possibilities was that it would come down and it would actually do a retest of the prior broken trend, which is why I quite often like just to leave the last prior ones on there. And that would have been your perfect entry. So if you wanted to take a long on that, or if you were shorting this resistance level that it failed to get back up above, then yep, you would have been able to, you still would have taken TPs at 198. And we also know that this level, and one of the questions I got in the Discord yesterday was just about fractally, do resistances, etc., and supports, do they sort of appear across all timeframes? And the answer to that, which is very complicated, but put as simply as possible, is yes, they do, but they often appear as different types of support and resistance. So this level up here at 100, at 210, roughly in this area is a whole bunch of things. So you've got a reverse level here, which is 210.6, and that was the you notice that, like, if I hover the mouse over that, it's a Monday. So given that that's a Monday, it's probably got something to do with a weekly, and that reverse level, which was a completely disrespected hold level, that never went back to the trend at the time, that one is both a weekly hold level and a daily reverse level. So when you see like a daily reverse level on a Monday, it's probably a weekly resistance. But there's that sort of confluence of the two. So, and then if we go back further, over here, we have an origin level, which is also in that 210 area. And that was hard closed back under by this blue candle all the way down here. So you basically had three reasons why the price was either going to close over and explode, or it was going to close under and dump. And of those various things, you've then got to figure out, well, if it does go down, where is it going to go down to? So a daily origin level is basically the equivalent of a weekly resistance, and this reverse level here, which was a Monday, is actually a hold level on a weekly. So we weren't really dealing with dailies, we were dealing with weeklies as far as this move here goes, which is then why you look at weekly, and there you go, 210.646 weekly hold, back to weekly trend, and that was your move. So we well, I don't know if everyone else did, but I longed up into this, hit this. I actually even bought some spot, which I haven't done in a long time. On ramped a bunch of spot, took it up into here. All right, closed the spot, position back to stables, closed the long, short back down, long back up, and the I TP'd it to a 6 on the other long, which was what was that? It was like a 4-hour or something, but yeah, there was a 4-hour move. I posted in the Discord that you might get a 4-hour play that plays out. So, so as far as the daily goes, it's closing well and truly below the downtrend, which is a bad thing if it closes down here. It really needs to pump back up before the end of the day and regain these sort of 210, 206 levels. It is going to create an interior trend, which is there. And so as long as it stays away from that, that can give it the bounce. So you basically need a trend to break a horizontal level. Right? So these things fight each other. So yeah, but as far as a very likely outcome is that it just ends up stuck in the middle here and you get compression. The downtrend is going to want to break the lower horizontal supports, and the new uptrend is going to want to break the upper horizontal resistances, and we just need to get one of these two sides to break, and then it can make its next move up or down. So looking at the 7-day, so 7-day, much like the 7-day on BTC, on BTC is looking pretty bearish. If it doesn't close back up above 208,597, it'll create a hold level, and that then could give you that next rejection. If it's going to have a fast dump, what it's going to do is it's going to push down before the end of the day, and it's a bit of a tricky spot because there is a range trend that comes through here, and there is your normal interior support trend that comes through here. So if it opens on the underside of the support trend but above the range trend, it can be a tiny little fake dip and then a bounce off the range trend. And you've got an untested range trend sitting all the way up here at about 227, 228. So this could be a really tricky trap where they just close under one trend, hit the next, and then head up to the topside range trend. Okay, so of course they would have the hold level to contend with at 208, but the range trend could break the hold level. It is possible, and then go up and target the topside one. And that topside one is very tricky. Like I always sort of have nightmares when I see TA like this, because it created this range trend and it didn't go and test it. So they left a gap. And I was talking in the Discord today or yesterday about when me and one of the other guys were talking about the 144 level on the 3-day for SOL. And for a long time, we were really convinced the price is going to have to go back to that 144 level. And there was a ton of liquidity there, and there was this weird little structural gap left. And it was almost just this creepy thing that nightmares were made of. And then sure enough, where did we just go? So on BitGet anyway, it managed to go down and tag the level. So yeah. So as far as this goes, if we don't close over 208,597, expect some kind of resistance if we do get back up there. We're also closing potentially under, and this is pretty bearish, this 204,636 level. That is kind of your, I don't know if you want to talk head and shoulders and all that kind of rubbish, but that is basically that level that could create that. The shoulder's a little bit lopsided, bit of a weird looking, person that got teased at school. But yeah, if it was to get up and over 204,636 for the day, that would definitely be a little bit more confidence inspiring. But yeah, this is looking like a very risky close. You can kind of see that they might be trying to just weasel down there. If they get under that range trend, and then they're under a range trend, they're under a support trend, they're under the 2021 levels, they've got a hold level. Ooh, yeah, I don't know quite what that'll do, but if it has to go and find the next support level on here, I think it would be 188. It'd be this here from 188,786. and then it would be 168. Should be that. Now, as far as the other thing that can happen here, but it takes another 7 days, is because we've had this big wick and it's come through the break level of this range, if we get another 7 days in here and we don't touch 175.965, then 175.965 would probably become a pretty good entry if it actually came down and hit it again. And it sort of has confluence with the other trends. So if it gets under these trends, starts to move down, finds some kind of support on 188, fights with the resistance, doesn't go down to this 175.976 for the next 7 days, then goes down and touches it after closing the candle up higher, that'd be a good place to be looking for entries. Okay, what else we got? So then after looking at how bearish the 7 day is, you go across to the 41 day, and the 41 day actually doesn't look that bad. I mean, it's not hard closing the trend, but as it currently stands, if the price stays at least around here, it's opening the next candle above the trend, and I mean, it's just a really big looking doji, and everyone knows I hate dojis, but you know, it could just come down and tap the backside of that trend and then go up again and try to attack the upper level. This 243, that's an origin level. If it can close over that, or even just sneak over that, it can go up. So that's all that's really telling us. The opposite side of this whole range is, so 135.922 started this whole move, and so that was this range from back here in May, which was hit, converted, retested, move. Now, if that level failed, the next one is back to the 120.487, which at this stage, this is still holding its uptrend, which is what it hit there. And it's in a position to potentially break the downtrend. So I don't know, 120. There is a lot of time frames, an absolute ton of them that are actually pointing to 123. So just worth probably worth pointing out that you've got all of this and this. So sorry, yeah, 123 targets. So you got all of these, and there's a 122, and there's a 121, there's 120. There's not much below that, as you can see, but there are a lot of outstanding reasons to go see 123 or lower. But whether or not it does it, you know, we had a whole lot of reasons to go see the 170s, 160s, 140s. We've just done all that. So yeah, we do have a whole lot of reasons outstanding to go see the 123 area. It's basically the bottom of the range for just about every single high time frame piece of structure. And yeah, so just make sure that you be careful, use a stop loss, and keep your liquidations sane, and don't trade with your whole bag. All right, what else we got? And yeah, just like to recap, because this was one that, you know, closed yesterday, and few people have asked me to actually do some trade reviews, which I can do, but it does take time to be going through and making videos. So, but just as an idea, yesterday, we closed this time frame. We didn't create a hold level. We broke a trend, and we shifted the trend to the top side here. Price comes down, price retests the trend, price bounces. Okay, so it's, as far as like trades, how do you get them? Well, when structure changes, it creates points where price will go one way or the other. So this could have gone up first, and it could have tagged that topside trend, and then it could have rejected back to one of the horizontal levels. It could have rejected all the way back down to here. So it's kind of good that it went down first. Or it goes down first, and then you can enter a long, and then you can take it back up. And that's basically what you would have got from seeing that close yesterday. And on the weekly, so when we had the weekly close, it created that hold level, it created these trends, and then as you can see, you got your move between the two of them. So this is basically why you want to be looking at closes and what structure they create, what trends do they move, what hold levels do they create, what break levels do they create, what origins do they create, and then you set alerts, and then you have trades. And of course, they don't have to be daily plus scale closes, but you've got to pay attention to this stuff, because if you've got a 4-hour close that looks really good and it's 30 cents below a daily hold level, and then you try to long, your long might just smack into the daily hold level and go down. And that's that's kind of the point of having an eye over all the different time frames, is that that there is something big here, and I will therefore be very careful on the lower time frame, because I'm going to run into something on the bigger time frame. And I should do a video or a class one day on how to do a chart properly. But basically, working top time frame down, you can put all your levels in, and this is how you can kind of do it on one chart, but you can put all your levels in on, say, like your monthly, and then roll down to your weekly, and then in between the two monthly extremes you put the weeklies, and then you roll down to the daily, and then in between the weekly extremes you put the dailies, and then you roll down to the 4-hour, and you just keep doing that until eventually you've built a box inside a box inside a box, and then you trade within the box that you have the time to trade within. And if you do it that way and you prepare to do it that way, you will never get caught out by running into something bigger, as far as your moves go. Alerts. Okay, let's have a look at Tesla. Okay, so looks like the daily closed in accumulation, so it's obviously in post-market now. It's not really lost any levels, but it looks like it's under some kind of interior downtrend. So if we take our anchor point, we go to there, that got broken and retested, so it goes to there. Yeah, so it rejected off it rejected off the interior. So it's basically got a range trend it's stuck under. It's got 1, 2, 3 compressed trends. So yeah, it's a wee bit dicey, actually. So all of this stuff that's on the top side here on the daily, whether it's the range trend, or it's 1, 2, 3 compressed trends, and compressed trends are danger, because every single one of these can reject, and if that price wicks into that, then you basically get hit with 3 baseball bats instead of 1. What's down here is your origin support level. So effectively, that is your really, really, really scruffy flag, whatever. And it's either going to have to get into those for probably, where would it have to go? 440s. It really has to get either up into the 440s and then take off to test this 465 or this 470 area. And if it can't do that, all of this compression is going to basically push the price down to 421. And then if 421 breaks, it'll fall to 411, and 411 will have to basically become then the bigger range. So that's like, becomes something like that. And then if the trend, maybe more like that, and then if the trend actually continues to push it down, then 411 will break. And if 411 breaks, then it's, going to be looking at some of these lower levels and some of these deeper trends. So it's good for now. But it's definitely been compressed to the point where it looks like they're trying to push it down through the horizontal levels. And so what you want to see now that you've got kind of another accumulation range in here, you just don't really want to see it going below this 421 or 419 sort of price point for any more than a day. It can work through it, it can take the liquidity, it can work through the trend, but you just don't want to see it stay down there for any more than a day. And yeah, if it gets, even if it just can get up above and close above that range trend at about 430 something tomorrow, 434, if it can get above that and stay above that, then the range trend could potentially push it up into that big open space, which is therefore not going to hit. There's not really going to be much resistance once it gets out of this bird's nest of compression. So that's pretty much what that's saying. And yeah, all good. Like, subscribe, and all that stuff. I managed to get, someone sent me a super sticker yesterday, and I think it was like my proudest moment I've ever had. That was pretty cool. I was like, yep. I I just closed some trades and obviously made some decent profits, and then I looked at it and I went, this $1.99 is the best $1.99 I've ever made. So yeah, keep it coming. Catch you later. Bye.